Welcome to Tech Intersect. I'm your host, Tanya Evans, and my life and work exist at the heart of law, business, and technology. Yeah, I've earned a few fancy titles and degrees over the years, but the bottom line is I'm a writer, speaker, teacher, and lifelong learner, and I'm really excited that you've joined me on this journey. So what is Tech Intersect? Well, it's authentic, empowering conversations with really interesting guests who demystify complex topics to prepare you for the future. Because your future is now. And it exists where law, business, and tech intersect. Get ready to listen, learn, and leverage. Let's get started. Hey everybody, I am your host, Tanya Evans, and in this episode of Tech Intersect, I welcome Charles J. Kelly III, also known as CJ the Smart Guy, to the show. He's a certified public accountant who graduated from Texas Southern University with both a B.B.A. in finance and accounting. He's also the host of the Pivoting Your Business podcast, focused on financial empowerment, unique perspectives, and interviews with like-minded people. And his focus is on helping clients improve their income and quality of life through his financial guidance, leadership, and advice. And I'm really excited to have him on the show today to talk about a very important item, how cryptocurrencies are taxed, how to prepare for the tax season. May 17th in the United States is coming up. We didn't have to file this year because of the pandemic, the pandemonium, but the government does want its tax money. And so I want to help everyone prepare for that moment. The 3-week countdown is on. And after this episode, hopefully you'll know more about the world of cryptocurrencies and the intersection of crypto and taxation. Before we jump into the episode, take a moment to follow and then like, share, comment so that others who would benefit from this content can find it. Also, I invite you to visit my website, advantageevans.com. That's advantageevans.com to learn more about my full suite of courses focused on the future of money and work and creativity. And this includes the flagship course, From Cash to Crypto, to help those on board into the crypto world or take their understanding to the next level. And also my new course, the NFT Law Guide for Creatives and Collectors. I focus on the intersection of intellectual property and crypto art and this new boom in the non-fungible token space. So definitely check out that course if you want to figure out just what this whole NFT thing is. And if you are a creative or a collector or investor, figure out what that means for you. Be sure to register for an upcoming free masterclass on either topic. There's something for everyone, from the newbie to the person who wants to really take a deeper dive in a super specific and nuanced area. Seize this opportunity to learn while you earn, create generational wealth, and do so safely, legally, and confidently with multi-lesson modules, live coaching, and community. I'll give you the unbiased facts in plain language and give you a solid foundation. So be sure to visit advantageevans.com for more information. Okay, time to listen, learn, and leverage. Let's get started. Today, I am so very excited to welcome crypto tax guru Charles J. Kelly, also affectionately known as CJ the Smart Guy. We'll ask about how he got that amazing title in a moment, but I welcome him to the show. Charles is a certified public accountant, or a CPA. He's a graduate of Texas Southern University with a B.B.A. in both finance and accounting. He's also the host of the Pivoting Your Business podcast, and it's focused on financial empowerment, unique perspectives, and interviews with like-minded people. And his focus is on assisting clients in improving their income and quality of life through his financial guidance, leadership, and advice. We will talk about all of that and more in a moment. But first, CJ, welcome.
Hey, thanks for having me. I appreciate you bringing me on.
Absolutely. Well, I knew we had to have this conversation after you so generously showed up for my From Cash to Crypto students a while back, just talking about, we were at the tax module and there were so many questions. I'm a lawyer who likes to stay in my own lane. I know enough to be dangerous and also to pay my taxes appropriately. But this is such an important topic, and there's so many questions. And so I'm hoping to explore some of the more common things, more common questions, particularly about how crypto is taxed. Generally speaking, we know that there's this whole taxonomy of crypto assets more broadly, but they are commonly all referred to as cryptocurrencies, even if they don't function primarily as a currency. The IRS doesn't seem to care. And so we can kind of talk about that. And then some taxable events and some other things to expect as people are preparing their personal taxes to file in May. First, I've been asking and will continue to ask all of my guests, there's so much going on in the world. Let's focus on the pandemic in particular. How have you been doing over the past year? How has it impacted your professional approach in this crypto space? I just want to make sure that you and yours are well.
Oh, well, thanks for asking. Yeah, it's been a crazy journey, for sure. A little backdrop before the pandemic, I had left my corporate job in 2016, and I created my own business model in the sense of working decentralized. So I was working from my phone and my computer as I was trying not to go broke from leaving a corporate job in order to create a business. And so, lots of ups and downs. And I passed my CPA exam February 2019, and I didn't actually get my license till June 2020. So it took over a year from me passing to getting my license. And as we all know, the pandemic really made an impact around March of 2020. And as soon as it hit, I created my Pivoting Your Business podcast, because I was well aware. I'd been studying crypto since 2016, 2017, and I'd been studying taxes and the CPA accounting stuff for over a decade now, if you go back to college. And so at one moment, everything combined, and that's when the pandemic hit. It was crazy because a lot of people were suffering. Lots of people got sick. Some people lost their jobs. However, I had already been struggling. And so for me, it was the moment where I pivoted my business and I said, oh, let me now, be able to reach out to all the people who may have heard about crypto, may have heard about blockchain. And now let's give them some tips, not financial advice, but if I was in that position, this is what I would do. And there were people who listened and they moved some of their 401k money into Bitcoin. And today, a lot of them have quit their jobs, and now they've hired me full-time on because they need to, get their bookkeeping, their taxes done. And so it's actually a great experience over this last year. Me and mine are doing actually really, really well, but we're humbled and we're thankful to God to, be able to be put in this position.
Amen. That is such a praise report. So I'm so grateful to hear that. And it was fortuitous in that moment for me too, in many ways, leaving one job, taking on another, but also at the same time launching an online education platform at a time when everybody was at home. Many people, I have the privilege of being home. It's an extraordinary privilege. Not everybody was at home, but those who were most interested at the time in my courses, there were a sufficient number of people who were really trying to figure that out. And all about the Bitcoin price in June of 2020. It was in the 10K, like it's even crazy to say it right now, but literally in the 10K zone. And it has been transformative for so many people who listened early and often. So that's great to hear. It's a blessing. And thank you for sharing that. So let's start with how cryptocurrency is taxed. What's the tax treatment of the Internal Revenue Service, also known as the IRS?
Okay, so first, cryptocurrency is taxable. That seems to be the first question that people ask me, because, Bitcoin came from an ideology of, well, we're going to create a currency that's away from the governments, away from the banks and things of that nature. However, it's still taxable. People who will say, oh, but it's anonymous. Bitcoin is not anonymous. It's pseudonymous, meaning all those transactions are still traced on the blockchain. And, whether it's through IP addresses, whether it's through locations, it can be traced. So cryptocurrency is taxable, and I would not recommend trying not to pay those taxes on it. There's a difference between tax avoidance and tax evasion. Tax avoidance is legally trying to strategize to not pay taxes. Tax evasion is when you just say, hey, look, I don't have it, when you know that you do, you're in the wrong. And so that's the basis of it is taxable. And, make sure that you do your due diligence, because a lot of these exchanges won't have it. So if you buy cryptocurrency, that's not taxable. If you earn it through like an airdrop, that is taxable the second that you're able to sell it. If you've earned like cryptocurrency interest, that's taxable. If you've received staking rewards, that's taxable as well. If you trade one cryptocurrency for another cryptocurrency, that's taxable as a capital gain. So for instance, you buy Bitcoin, it's at $5,000. You sell Bitcoin when it's at 20,000. And when I say sell, either you're buying US dollars or you're buying another cryptocurrency like Ethereum. You will have a capital gain from that 5,000 that you bought it at to the 20,000 that you sold it at. And that 15,000 will be a capital gain. If you held it for less than a year, then it's taxed like as ordinary income. If you held it for greater than a year, then you're taxed at the more favorable rate for capital gains, because when you work for your money, you get taxed a whole lot more than if you earn it passively.
That part. Let's pause. Let's say loud, pause, and reflect on that. When you are working for your money, you get tax heavy. When your money is working for you, not as heavy. This is very interesting. This is a very interesting moment. So catch that. You are really focused on generational wealth and not starting over from generation to generation. And I will speak for myself personally. You know, father is a surgeon, mother, patent attorney, get that good job, high income earning. And in some sense, maybe it's a both and. But look at the folks who really have amassed generational wealth. They would much prefer not to receive any income. Yeah. And to have all of their capital assets and other things that are literally working and bringing home a check as well, or instead. So when you're weighing the cost benefit analysis of this, maybe it's a generational focus, maybe it's a cultural focus on being a high income earner. Take a step back as a matter of generational wealth to see what your portfolio looks like. Income is you showing up at a job and getting paid for that. What are the other ways that you can have a basket of assets that also earn in some other way? And that's what makes capital assets so intriguing and alluring. And now we have this emerging asset class with the same type of tax treatment when you think of, I guess the IRS technically has this larger umbrella of virtual currency under which cryptocurrency is one. It's an interesting way that they approach it, right? So crypto is a part of virtual currency, but they always seem to paint with a broad brush to make sure it's comprehensive. Yeah. And under that, you have a capital asset. Yeah,
they're still figuring out as they go. They're still coming up with new updates regularly because the crypto world is ever evolving. And so they're trying to figure out ways to track it, figure out, well, what is this, exact niche? How can we tax this? And they're just figuring out as they go. And so my goal is to make sure that people are using good faith, meaning they're trying their best to make sure that they comply, because that's the main goal, is to keep you guys safe, as well as making sure that, when you're in his Rome, you pay taxes in Rome, but at the same time, we're not trying to be extorted, because people who don't know what they're doing, they can sometimes freak out if they receive letters from the IRS, or if one of their exchanges comes out and says they owe a whole lot more than they do. Just make sure that you reach professional people and you use good faith to try to do it correctly. It's the people who are evading are the ones that they're really coming after.
Absolutely. That's a really good point. And we see the effort or the ramp up by the service to capture as much information as they can. It's kind of an information grab, and there's the sweet spot of what you must do, what they might invite you to do, but you're not required to do, and making sure that you pay every cent that you must pay, to Caesar, et cetera, and not one penny more. Mm-hmm. And you do have rights. And so navigating that is critical, but it's critical that you do that, as you say, CJ, from a good faith perspective and also from a position of power. And information is power. So it brings me to this question that I continue to receive. I know that you do as well. And I'll say now, I said in the lead up to this episode, and I will say again, this is not legal or financial advice. This is for educational purposes so that you can do your own research to inquire more. So we're going to stay at a very high level, but give you the heads up of things that you should learn more about in consultation with your CPA. And please pray that CPA knows what crypto is or you're in big trouble. But I digress. Do your own research. But for the first time, the 1040 form, first tell people, I hope everybody listening has at some point in time filed one. The 1040 form for the first time asks whether at any time during 2020, or so they're asking this question for the first time on the 2020 return. At any time during 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? That's huge. And the first time you and I talked about this, and a friend who's also a CPA, Shihan, he's been talking about this. This is really confusing because my lawyer brain focuses on the most general catch-all clause within that phrase, otherwise acquired. I'm like, well, hell, that means every damn thing. Otherwise acquired. That in my mind, but for other additional information or clarification, would mean bought, received as a gift, right? So there was some additional information provided around that to give taxpayers context. So talk a bit about that.
Yeah, so in 2019, they had that box, but it was on the Schedule 1. It wasn't on the first page. And that was the first time we had seen it. And then in 2020, they moved it to the very first page. And so as a CPA, I was like, oh, I see this difference. And it was like a really exciting time for me. But like you said, it was very confusing because it was like, well, why would they ask if you acquired it? Because it's treated as property. So when you acquire property, that means you received it. And so I was just telling everybody, click yes. If you do anything with cryptocurrency at all, just hit yes. If you hit no and you knowingly did it, they can always come and say, hey, it was fraud or something like that. And they have an infinite amount of time to review those records if it's fraud. So I just say hit yes. And, in good faith, say, hey, I got $10 from a earn on asking a question or for signing up for an app. I got some cryptocurrency. I hit yes. But there was a publication that came out that had said that if all you've done is buy it, then you don't necessarily need to hit yes in the box. But publications aren't always the final ruling. So I would still in good faith just hit yes if you've done anything with crypto at all. Because if you've just been buying it, you're not obligated to pay any taxes anyway. So it's like, why try to hide it? Everything's on the blockchain. To me, eventually, all these transactions will eventually be traced. In my mind, me being conservative in that nature, and just knowing that if in good faith you make a mistake, they typically only have 3 to 6 years to come after you, depending on how big of a mistake it is. But when you do something fraudulent, they have an infinite amount of time. So I try to make people steer clear of that and just click the box yes.
You love listening to podcasts, but have you ever thought about starting your own podcast? Maybe you want to build a brand, grow your business, or are looking for an excuse to talk about your favorite hobby. Whatever your reason for making a podcast, Buzzsprout is the place to start. Since 2009, Buzzsprout has helped over 300,000 people launch their own podcasts. Buzzsprout walks you step by step through the whole process and will give you powerful tools to start, grow, and monetize your podcast. Ready to get started? Click the link in the show notes to get our free step-by-step guide to starting your podcast today.
We hope you're enjoying this edition of Tech Intersect. Our conversation will continue in a moment, but first, a word on an exciting opportunity.
There's a more cost-effective and time-efficient way to reach your leading-edge learning and earning goals, to put you ahead of the stiff competition in this fast-paced, tech-driven economy. You need skills, credentials, and a fast track to a competitive advantage. You need it now more than ever, and I can help. The Advantage Evans method puts you ahead of the curve with condensed, comprehensive online courses, curated content to leverage your current skills and expertise, live coaching, networking opportunities, and more. Upcoming courses include From Cash to Crypto to help you buy your first Bitcoin, and there are 2 ways to get your advantage. Advantage Evans Encore gives you maximum experience for your total competitive advantage and access for 1 year. It includes a live welcome and modules on terminology, buying and selling, exchanges, mining, earning crypto, trading and investing, and also several of the legal issues you need to know in order to be safe and secure as you enter this space. That includes tax compliance, how to plan for a Bitcoin estate, and securities laws to make sure you avoid any legal unforced errors. Now, Advantage Core gives you the essentials. It's a short course to give you what you want and the support you need to buy your first crypto in as little as 3 weeks, with access to the information and replays for 3 months. And if you're not quite ready for your Advantage and want a sneak peek to try before you buy, then register for a free masterclass where I share my Crypto 101 success checklist and cover current hot topics in crypto. So there truly is something for everyone, including you, to get in on the fast track and learn and earn in the digital economy. Visit AdvantageEvans.com to get started. That's AdvantageEvans.com.
And now, back to the conversation.
That seems to be the conventional wisdom. And in addition to teaching blockchain cryptocurrency and the law, information privacy law, and entertainment, I also teach administrative law. And it's been very eye-opening to understand rulemakings and statements and decisions that may come from an agency that don't have legal effect, but are advice, guidance, advisory notions. And until they're challenged in a court of law, we don't know for sure. That's the agency's interpretation. Now, in a court of law, generally speaking, a court will defer to an agency interpretation in many regards, but you don't know until you know. Now, I don't want to be that case. I'm not interested in being a test case. But your point is well made, and it's absolutely true. And so we're just in the early days, and it makes it the best advice or tip that we can provide is the good faith effort in engaging the material in that way. There's another question that comes up, especially because there's so many athletes and entertainers at this point who are starting to request some or all payment in Bitcoin, for example. And so the question comes up whether the receipt of an asset that is taxed as property is income. Can you shed some light on that?
Yes. So if you are receiving it as like wages, then that is taxable at the fair market value that you received it at. So let's just say Bitcoin is at $50,000 and you receive one Bitcoin every 2 weeks. The next time you receive a Bitcoin, it's at 52,000. Next time it's at 55,000. Well, then the first time you would report $50,000 worth of income. The second time it'd be 52,000, and that third time it'd be 55. So whatever the fair market value is of that Bitcoin or that cryptocurrency that you receive it, that's what you would be taxed at. And when I say receive it, that is the moment that you are actually able to control it, meaning you are able to move it to another wallet, you own it. Sometimes they'll say, hey, you have it, but you have to vest, meaning like you have to hold on to it for a year. And after that year, then you can actually trade or transact with it. Then you wouldn't include it as income until you actually have dominion over your cryptocurrency and you can do the trades or transactions.
Oh, that's really important to know and to understand the distinction. There's another thing that comes up. You mentioned it earlier about airdrops. So you have a wallet and all of a sudden the magic money shows up in your wallet. And the question becomes, I didn't ask for that. I don't even know exactly where it came from. If I sell it, well, one, the receipt of it, we'll start there. Mm-hmm. The receipt of it, is that a taxable event? And then obviously the sale of it to the extent that it is liquid in a market at that time.
Yes. So if you receive an airdrop similar to wages, when you get the airdrop, it's considered income at that exact moment. And so for instance, like the Bitcoin Cash airdrop, some people didn't get control over it until the next year. And so the second that you get control over it, that is the fair market value that you get taxed for it. And then if you sell it, the difference between the fair market value of when you received it versus the fair market value of when you sell it, trade it, buy it for goods or services, the difference between that, then you're also taxed at a capital gains level. But since you've held it for less than a year, then it would be ordinary income, basically.
Got it. Got it. No, that's very, very helpful. All right. So we've been talking through all the good faith ways of making sure that people are informed and paying on time. What are some of the penalties for filing false returns or for underreporting?
If you were in good faith and you just made some honest mistakes, they normally have 3 years to go back and review it. And so that's what I'm telling everybody: use good faith, because the IRS, they're way behind right now, and on top of that, they're just learning all of this stuff anyway. So if in good faith, you should be okay. However, if you're not using good faith and you want to take advantage of this type of stuff, they actually have an operation called Hidden Treasures right now, where they're looking at prior years. Anybody who's been doing transactions of more than 20,000, they are actively looking to see if they filed their taxes correctly or they tried. And so let's just say that you never reported any of that. And back then it was maybe $30,000 worth, but now it's $300,000 worth.
Right.
Well, we do not yet know how they're going to hammer down on them. Are they going to say, well, you owe us the original amount of 30,000, or are we going to say, hey, you owe us this piece of Bitcoin at this moment, and then you're penalized greater? So we don't quite know all of the penalties, but we know if you in good faith, they have 3 years. If you underreport or overstate your basis, then they typically have about 6 years. If it's 25%, you owe 10,000, but you only told them you owe 6,000, then they can come back 6 years. But if it's fraud or evasion, they have an infinite amount of time. And I like to make jokes and say, well, they couldn't catch Al Capone, doing all the alcohol, but they caught him on his taxes. So, it's not really a joke. That's really what happened. So a lot of these people in the crypto world, they're thinking they're Al Capone, or they're gangsters, or they don't have to pay their taxes because it's a whole different world that's not attached to a government. Well, they have an infinite amount of time. And I do feel like the technology will eventually catch up to the IRS. Will be able to identify those major players. But in good faith, it's only 3 years. So I think you'll be okay.
That's great. Thank you for that. And great analogy. So catch that. Right. Don't be Capone. Be better. Yeah. So that leads me to one of my final questions about, so people are all in, they want to have have good faith. They are used to receiving forms at the end or the beginning of the year that would give them an assessment, and it's kind of just plug and play. That does not happen in most cases in the crypto world. So what are some best practices for tracking crypto transactions?
Yes. So this is actually this is where the biggest issue is coming into play, in the sense that some of these exchanges aren't based in America. So for instance, like if you're using a Nexo or Binance is in China, Nexo is in Europe. And so their accounting, their taxes are done completely different. And so that can be difficult. And also using all these different exchanges, they're not really uniform in nature. So say if you're buying Bitcoin on Cash App, you're buying something else on a Uphold or eToro, you have all these different formats. The best way to do it is to export all of the transactions that you've ever had across every single platform into one Excel document that you have saved either on your computer and an external hard drive so that you never lose it, as well as maybe the cloud. Diversify your possibility of losing an asset or anything of that nature. You want to make sure you keep that close to you, because that essentially becomes I don't want to say it's the transaction Bible, but if the IRS comes after you, you say, hey, look, this is my documentation. This is everything I've ever had. This is what I was booking it off of. And if you were in good faith, they really can't come after you, because a lot of this stuff, like there were no guidances for a lot of this stuff. If you're trying, it takes away that fraud, that evasion. If anything, they might say, okay, you owe us some money. And then you can hire a lawyer or a CPA who can say, hey, look, let's fight the IRS. I mean, you could do that anyway, but you typically want to be good faith where you show them that paperwork. I think that's the number one biggest thing, is to own your spreadsheet of all the transactions that you've ever created, and having a CPA who understands not just the accounting for, but actual cryptocurrency itself. Most
Right.
CPAs will keep you compliant because there is training on it now. So they know it's treated as property,
Right.
but most of them don't have any idea of what the crypto world actually is.
That's going to be problematic. And I think that's what makes you and folks like you so incredibly valuable in the space. I receive a lot of that because I work at the intersection of intellectual property and crypto, now NFTs. Ask you a quick question about NFTs and then lovingly release you back to all the work I am sure that is staring at you in your inbox right now. But it is really a special time for those of us who have been in the crypto space for a while and also had a separate professional discipline, and to see them align so incredibly well at a time like this, and to be a Black woman, to be a Black man in the space as well, just speaks volumes to the potential, the power, and the possibilities of aligning the future of money with what we already were trained to do. It makes it really exciting. And so I'm so happy to see you doing so well. My final question is about NFTs. NFTs have boomed. If you'd like more information, not you, CJ, but if anyone who's listening would like more information about NFTs and the intellectual property implications, how to leverage and protect your intellectual property in this space to really excel, then I have a free masterclasses, but also courses on the topic at nftlawguide.com. A question that comes up, and certainly there's a module in my course at a very high level that deals with the tax treatment. But what would you say for folks who are minting and selling NFTs on the one side of the transaction versus those who are collecting, buying, acquiring a crypto asset that the IRS may see as a cryptocurrency, or at least a virtual currency? What are some of the best practices around NFTs and tax?
Yes. So say one, NFTs is it's a huge new space. So there's lots of different points of views. If you are minting or creating your own NFTs, the first thing I would do is I would create a business entity so that you have some type of protection as well as diversifying your assets. So say if you create an NFT and I don't know, it glitches or something and somebody wants to sue you, they can take your LLC's assets, but not your personal assets. You want to keep them separate as much as possible. And then because you have that LLC, that business, at that moment, then you'll be able to write off some of the expenses to create that NFT. And at that moment, then you have your LLC that owns the artwork that you are then selling. When you buy, like when somebody buys it, typically that would be considered income for you because that's your profession. At that moment, the person who has bought it, they are now buying technically it's a property. If they are in the business of collectibles and they're, a high income earner, the IRS may consider them collectors. And so then they'd be taxed at a higher level than property. They'd be taxed at the collectible rate. But even then, even if you're buying it, I would still typically do it under an LLC. You want to do it under a business entity for various reasons. So I would highly recommend, not advice, but I would recommend that people create their LLCs or some type of business entity in order to diversify their liabilities, diversify their assets, as well as show the IRS that you're actually serious about this and it's not just a hobby.
Right. Oh, that's great. That's a story for another day. We could do a whole episode on hobby versus actual business engagement. Really, really helpful tips. CJ, thank you so much again for your time and for your expertise and for all that you do in the industry in particular. I see you leveling up and bringing other people along for the ride. And so I'm so happy that we're connected. How can people stay in touch with you after, I don't know, June, July? I can imagine you're pretty busy right now, but once you come up for air, how should people engage with you and when might that be?
Yeah, for sure. So the easiest way to reach out to me is at CJ the Smart Guy on Twitter or on Instagram. I'm on social media more than I'm on anything else at this moment. That's the best way to contact me. Also, you can check me out on Clubhouse at CJ the Smart Guy. Every Monday at 10 a.m. Central Time, I'm part of the Genesis block with the Black Bitcoin Billionaires Club created by Isaiah Jackson and Lamar Wilson. There you can ask me individual questions. I try to give at least 1 to 2 hours on there for free, just so that people are able to learn. At the end of the day, I do this for the community. I do this for you guys. Money is just something that you have to accumulate in order to reach more and more people. I just look at it as a tool. So CJ the Smart Guy across most platforms, Instagram, Twitter, Clubhouse, as well as my podcast at Spotify or Apple Podcasts at CJ the Smart Guy. I have my Pivoting Your Business, Entrepreneur Period podcast, and I'm actually in the beginning stages of creating my next one. So be on the lookout for that. And hopefully by the end of the summer, I'll be able to take on some more clients. Right now, I'm in the process of hiring people. I'm trying to expand, scaling. Hopefully it's not as bad as Ethereum and my gas fees don't go too high. So,
See, that's a nerdy crypto joke. Did y'all get that? I love it.
Yeah, but that's right. We're trying to scale. So it's a blessing. Thank you.
Absolutely. I'm going to drop all of those links in the show notes. Thank you again. And I'll see you in July. Everybody get behind me. So I'm at the head of the line, and then you all can stand behind me. And then one by one, CJ will take us all on. Thank you, sir. I appreciate you.
Oh, no problem. Thank you for having me.
Thank you, CJ, for so much great information, fantastic advice on the taxation of crypto assets, including how cryptocurrencies are taxed, what to expect on the 2020 1040 form, penalties for filing false returns and underreporting, that's a no-no, best practices for record keeping, and even some thoughts on crypto collectibles. The best practice is to stay ready so you don't have to get ready, and contact a CPA well-versed in crypto, not just any old CPA, but one well-versed in crypto. It's a really, really important step, and there are more and more coming online every day. Also, be sure to sign up for cointracker.io, cointracker.io, to get started tracking your purchases, your transfers, your sales, and your balances so that it makes tax time a breeze. That's cointracker.io, link in the show notes. Okay, before we sign off, please take a moment to like, comment, and share this episode and this podcast with your networks. Follow me on social media and let me know what topics you'd like to hear more of and who you want to hear from. All right, that's all for this episode. Until next time, continue to shine.
Stay in touch with host Tanya Evans via your favorite social media. On Twitter at Tech Intersect, and on Instagram via the handle Tech Intersect. This podcast has been produced by Stephanie Renee for Soul Sanctuary Incorporated.